afternoon and welcome everyone to AvaTrade live Q&A webinar. My name is Danny and I'll give you the webinar today. Before we will begin, as always, we're going to go through a quick sound check to make sure that everything is... just a second, I also want to check it on my end as well. Okay, so for me it looks like the audio is just fine, but I'd be happy to see that people are commenting on the question section. The sound is also okay on your side. Okay, that you can hear me properly and you can see the screen here properly. So please use the comment section to let me know that it's okay. Thank you, David. Very good. Selena, okay, very nice. Okay, so we're just gonna begin. I'm going to explain to you what will happen in the webinar through this lovely presentation that we have. Okay, so first thing is to go through the previous questions. So what we're gonna do is we're gonna have a live questions and answers webinar, which you can just ask whatever you want along the way, regardless the topic that I'm explaining presently. Okay, and the previous questions are questions that we received. I'm not gonna lie, I went through that before just to make sure everything is as it should be. And it looks pretty good. We're gonna go through that and we're gonna try our best to answer it on the best way. Okay, dynamic questions are what I've explained a minute ago, which are questions that you guys can just ask whenever you want along the webinar, and I'll paste it down here. Then third part will be a bit more informative. It's where I can send you these links to save you the trouble looking for certain things. Okay, and lastly, we're gonna have analysis. Okay, for people who knows the previous webinars, this is optional. Okay, it's if it will be covered through the questions. If we will receive, let me see. Usually we get questions regarding to analysis, so there's no point just going through analysis again. Okay, if it doesn't happen, so perhaps we can cover it at the end. Okay, now any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now guys, even if you didn't understand something on the first time, which is fine, or even on the second time, you can just review the webinar on our channel later on. Okay, so that means that this webinar is recorded. It should be uploaded today, it could be even tomorrow, but possibly today with no guarantees. And yeah, I think we pretty much ready to go. I'm just gonna make sure that it's recorded as I mentioned a minute ago, and we will begin. Okay, so I'll be right back. Thank you very much. Excellent. I didn't find any issues. Everything seems in place, so that means that we can finally hit the road. Like I said, we're gonna begin with the previous questions. Okay, and we're gonna go one by one and see exactly what we have today. So how does AvaProtect works? Okay, very good. Can we get signals with AvaTrade? The answer is yes. Okay, how to do fundamental analysis? That's also fine. Who can I address if I need something? That's also very, very easy to answer. How does the leverage works? Okay, so we're gonna take the previous. We're gonna take the first question. We're gonna paste it down here. Just a second. I'm gonna put it where you guys can see as well. Yeah, and the question is, how does AvaProtect works? So just on a nutshell, and before I even get to AvaProtect, so you'll know, this interface is called a web trader. To enjoy this product, to enjoy AvaProtect services, you have to either use the web trader. Let me just write it down for you. AvaProtect, okay. You can do it with the AvaGo or the web trader, which is frankly, this is the desktop version, and AvaGo is simply the mobile version. Although it looks a bit different, but it's not the end of the world. You may find most of the features that you have here, referring to AvaProtect as an example, and some other features are on the app as well. and the desktop version is presenting it a little different, but still it works the same way. Now, how exactly? I guess that this is a very common question, and the reason is what this product is allowing you to do is to protect the position for a certain time frame. Okay, and whatever you lost during that period of time, you're gonna get back. Now, let's understand a few things so we can even understand how AvaProtect is useful. Protecting a position, how long should we protect it? So what exactly are we protected from? We're gonna see all of that in a second. Okay, I'm just gonna jot down here so there will be no confusion. Sorry, what I'm gonna do is I'm gonna paste that one underneath, and we're gonna see a few rules for that product. So it's applicable on Forex, gold, and silver presently. Maybe in the future it will change, but that's what we have now. When using the service, there is a fee. Okay, if I'm not using it, look, the fee is this. I'm going to show you in a minute exactly how to maneuver with it, what makes it increase or decrease, and how to use the product efficiently. Okay, but right now we're just looking at the option if to use it or not. So if I'm using it, there is a fee here. That means that I'm going to be charged with 14, sorry. And if I don't use it, there is no fee, right? Quite simple. Now, what does that mean exactly? That I can cover my position, that I'm protected. From what exactly am I protected? Okay, so now we're looking at Australian versus New Zealand. I'm not sure that I want to show you on that. Because we said that this is Forex, gold, and silver. So what we're going to do is we're going to open up maybe gold. Okay, we're going to click it and it appears. Now I could do it through this Maglify. I could do it through the search bar in here. Just not to do it too fast. Let me just show you how I got to here in the first place, so you won't be confused. This could be my default screen, or this could be my default screen, but either way, to fold this down, I can click on the upper to right two tiny arrows you see pointing on themselves, and if I click it, it makes them open. Okay, now they're pointing to different directions, and then it seems that the chart was folded down. You see how simple that was. And like I said, I can put in gold from here or from here. That really makes no difference. Then I can put it back, okay, to see the chart nicely. And then sell or buy brings up this nice sidebar, which I can find more useful things on it, such as leverage, such as margin impact, and that allows me to see how much of lot size I can simply take. So look, okay, we're gonna get to that. It's not now. I have two tabs. This tab has two tabs. One tab is the order entry, which is fine. We're gonna go through that. And the instrument details, buying and sellers. We also have the working times, when I can trade, the lot size, the overnight fee, and all kind of nice things. Now, we are going to focus on AvaProtect just to understand how to maneuver with it. And the idea is, like I said, we're going to protect the position for a certain time frame, and whatever we lost, we're going to get back. Now, let's understand. If I'm taking a buy here, let's suppose that I took a buy, okay, 2033, and I'm heading to 2063, which is roughly $30 up. Okay, I can be precise with the figures, but there is no point because it's moving anyway. And this one is $30 down, makes it here a little. Okay, yeah. Now, how does that work? If I'm taking a buy, that means my intention is the value will increase, right? If I'm taking a sell, my ambition is that the value will decrease. What happens if I took a buy and it goes down? Who knows if I took a buy here and it went against me, right? Let's assume that I took a buy and it, God forbid, went to the red line in down here. What happens then? Guys, it's as simple. I lose. Exactly. Thank you, Thomas. So I lose. Exactly. So if I buy and it goes down, I lose. If I sell and it goes up, I also lose, right? It's vice versa. I buy, I want it to go up. So it will always work the other way around. Now, if I took a buy and God forbid it went down, I want to be able to protect myself, okay, and get my losses back. And I can do it with AvaProtect. So the way that this works is very simple. Let's suppose I'm looking at gold. This position seems fine. This price is where I'm aiming for. Okay, once I click on the box here, I can either click on the box or I can click here on the shield. It really makes no difference. Let's try it on the shield. And then I can choose how long my coverage life is going to be. Now, 1 hour, let's see this price. Now I'm going to place a timeline to see how long ago that was. That was a little more than a week and a half, maybe 10 days, roughly 10 days. Let's agree on 10 days, give or take, maybe 9. Don't judge me. And we're looking at 1 hour. And frankly, this could be a little far-fetched, happening in 1 hour. So I can increase. I want you to pay very close attention to what's happening with the fee when I increase the left, okay? Watch. So 3 hours make it 50. 6 hours make it 53. 1 day, 86 and 93. Now, when I'm looking at this position, what we're going to do is we are going to apply something called take profit that in this particular platform allows you to do your potential profit. Your potential profit, the take profit. Okay, I will explain first what it means and then we're going to carry on with the answer for the question. Okay, so take profit and stop loss. Don't worry, I'm going back to the explanation in a minute. Take profit and stop loss are pending orders. Pending orders, that means that they are prices that I ask the platform to remember to close my position automatically with a profit. This one is a price that I'm asking the platform to remember and close my position with a loss. Why would I even do that? Why would I use stop loss, guys? Is it mandatory? Is it advisable? Is it what's the story with the stop loss? Not mandatory. Right answer. So what we're gonna do is we're gonna measure 2033 to 2000. Oh, you see it went up a little bit. This is why. Okay, so we're gonna place the number down here. This one, let's make it a default. Oh, sorry, should be here. Okay, and we see that this is $30 difference. If, God forbid, let's increase it a little bit. Okay. Okay, well, apparently this is a little too much. Let's make it 50. No, 15 here, sorry. And now what we're looking at is $1,500. Okay, if it gets to here. If, God forbid, I didn't place any take profit and it went down to here somewhere. Let's see. Okay, so I can basically wipe out half of my account if it gets to here and I wasn't with a stop loss. So stop loss, the reason that I'm using it is to prevent myself from losing more than I wanted. Okay, I'm able to maneuver with it and to do good risk money management. Sorry, we're gonna bring it back to the bare minimum. Okay. Okay, and then we have $30 down. We're gonna make this one $30 up as well. So we have $30 up and $30 down. Okay, and again, it's not mandatory to use stop loss with AvaProtect, but keep in mind that I'm only covered for 2 days, meaning I can keep the position open, but I'm not gonna get the money back. Just a second, I'm gonna put it here as a rule. I will only get my losses back on the time that I was covered. Okay, in other words, I covered it for 2 days, but I decided to keep it for a week. What will happen is I'll get the money that I've lost in the 2 days that I was covered. You have a nice expiry here. You see that? Here's a nice expiry here to remind you when it's going to expire. Now, one of the things that I'm also going to put here is I can't expand my position coverage when it's done. Now, those are rules for you to remember and to be able to use this product efficiently. I can tell you that this product is pretty amazing, to be honest. Look, I'm going to use an example with what we had a minute ago, the 50. I think it's a little too much, but look, if I'm looking, we're going to make this simple comparison between our ambitions to what the actual fee is. Okay? In this scenario, if it gets to here within 2 days, what will happen is I'll make $300 and I'm paying $100. Okay? Between you and I, it's a little far away. I'm not sure it's going to get there in 2 days. Okay? But in case it happens, this is what I can make. This is what I can lose. So it's pretty good. This comparison is pretty good. Now, obviously, if I will increase this to what it's been, the fee will increase, but also my potential profit and loss. Okay, so that determines, in other words, we understand that this determines the amount of units that I have, that determines how much profit or loss I can make. Okay, so to use this product efficiently, I must make this comparison and know that it's worth to use it. Okay, I'm not going to use it in case, again, I exaggerate, but it's for you to learn. It's mainly the reason. Just a second. Okay, if I'm using these proportions, allegedly, I was supposed to make your profits. But what the problem? The problem is that I'm paying a fee of 520 quid and I'm planning to make 500. So what exactly the point on using AvaProtect? Okay, we're not going to delay on that too much unless anybody has any questions. Any questions about AvaProtect or anything that I've explained so far about the calculations or depending orders or anything else? Any other questions? No Billy, okay, so you're asking if it's applicable with MT4. As I have explained initially, it's not. Unfortunately, it's on the web trader and the AvaGo only. Okay, thank you for the lovely question. We're going to carry on for the time being. I think that this is what we're going to paste down in our underneath the question. Let's just hope we can somehow put it right next to each other because it might take a lot of space. Just a second. Okay, so there it's written here, even though you saw the answer on the screen. So can we get signals? Now, the signals is something that we added in the past few months. Okay, I'm also going to paste it here. Okay, and if we're looking at, I think for now, we're going to get rid of that. And we are going to go to the default screen. Again, I want you to be able to do it smoothly. How much is it per month? You mean AvaProtect if you cover it for a month? The max that you can go is 2 days. No. Look, the max that you can go is 2 days. Oli, you see, from 1 hour, that's what I showed. So if I increase, it increases the fee, but as far as I can go, it's only 2 days, right? Maybe in the future it will evolve, who knows? But for now, that's the case. Can we get signals? Now, as I was about to show, this is extremely simple. I don't need to think too much how to get to the signals. They are either from here, there's light, blue lightning icon, I can click it, opens me the signal right away. Then I choose sell or buy scenario. Let's go with the sell for now. And everything is already prepared. Yeah, very simple. Now I'm also going to give you some nice tips how to use the signals wisely. The second way that I can access the signals is not from here from the outside, is actually from the signal section itself. So what I'm going to do is to click here. How much is the fee of AvaProtect, or is it free? Look, Oli, I am showing you that AvaProtect is not free, and it's based on the length of your coverage. So 1 hour is going to cost me $21 with Aussie versus the American dollars. See, but when I increase, it increases the fee as well, right? See here, it keeps going up. And if I also increase the lot size, look, I'm going to change it from 0.25 to 0.5. Okay, 152, and we're going to go for 75 as an example. So it increases a little bit. One lot is a little is even higher than that, and so on and so on. Okay. Yeah. Now, so you guys saw how simple that was, right? To open the signal, but let's see how we can use it wisely. So we're going to click on the signals, and we will see that here it's lined down through the signal produce time. What is the difference between this and accessing it from the icon here? That in here I can only see when it was produced when I click it. But if I do it from here, then I can know exactly when it was before I'll even take it. Now, who can think of a good reason why would I even need to know the signal production time? Who cares about when it was produced? Why? What kind of an impact does it have if it was produced 4 hours ago or 4 minutes ago or now? What do you think that that is the difference? Okay, Jonathan, you wrote it might be better to use. What do you mean by it might be better to use? What will be better to use? That was produced now. Okay, why would I want to use? Why would it be? It might be better to use if it was produced now or not. So look, you see some signals. I'll explain to you the idea with the signals, and then it will be easier to carry on with it. So let's go with copper. Okay. I'm gonna click it, and then I'm gonna show you something that's happening. Okay. You see, this is the price that the signal was based upon. Now, what exactly this signal is made out of? Okay. It's made out of levels of support and resistance. It's made out of technical analysis. Okay, and when I'm looking at the chart, there is one more thing before I carry on, just to give you a little tip how to match the chart to this image, because you're not going to see the same levels unless you're looking at a reasonable time frame. Market is consistently moving, so the current is better and not the stale signal. Very nice, very nice, excellent. So this is, well, now the idea behind this signal is that those are certain levels, right? That was produced based on the price that I showed you. So that means that at the time that it was produced, whoever composed this signal thought, okay, those are the levels that I'm seeing, and I have a buy and I have a sell scenario. That means that I have certain ambitions for copper to get to those levels. Now again, I'm not going to be able to see those levels unless I'm going to make a reasonable comparison between this image to the chart. You can see that in here, I can go all the way to 3.8420, which in here it doesn't even exist, right? Why it doesn't exist? Because I'm not in a reasonable time frame. This is daily and this is 1 minute. So obviously every candle down here is just 1 minute. 1 minute, 2 minutes, 3 minutes, and so on. If I'll change it to 1 hour, it helps us a little bit, but still not too much. And now again, every candle presents 1 hour. If I'll go to 1 day, let's look together at it. Okay, now I can finally see the numbers that if it doesn't let you land the line, you see I got it from here. It's tiny arrow, it falls down a whole inventory. If it doesn't let you land it on the price that you want, you can just place it anywhere on the chart. Could be here, it doesn't matter. Okay, and then I double click it, okay, to change the coordinates, and I can simply put here 420, click save, and it's going to jump down to where it's been, to where I wanted it to go. And exactly like Ollie wrote down, the reason that I want to have the signal as soon as it was produced, because it allows me to choose naturally which scenario I want, and it could be, the results could be quite similar. But if I took something that was that went bullish, okay, and I'm looking at the signal from few hours ago, and I'm looking at, let me just show you, I hope that I can show you that. Let's go with a buy scenario. Let's see. Buy scenario. You remember, take profit closes my position with the profit, stop loss closes my position with the loss, right? Yeah. You see, the profit and the loss are still proportional. Making 60, losing 40. Okay, that makes sense. Maybe I'll go for the buy scenario if I want to. Let's try the sell scenario. Just a second, the sell scenario. Okay, you see, very, very simple. So again, making 60, losing 40, that looks very good. What if I will go for another signal that was not really so it was a little farther away, like this, and we are going to go with the buy scenario. Let's see. Okay, you see my profit now is 27, my loss is 71. Okay, I'm not really sure that I'm going to be happy with this ratio, but if I would choose the sell scenario, just a second. Now it makes more sense. 70, I can make 70 and lose 20. Now, the reason that I'm showing you this, guys, is it's not a problem to pick it from the outside. Okay, don't get me wrong. The signals from the outside and from the signal section are the same signals. There is no sorry guys, just sorry. So as I was saying, those are the same signals. The reason that I'm showing you this is to be able to use it wisely. So you can see here the signals, and from here you can see when it was produced and choose the signal that you want. Okay, that's the only reason. Yeah, I think we pretty much, can we get signals? Obviously, yes. I just showed you. Yes, through the second. There are two ways access signals, either by clicking on the blue lightning icon or the signal section itself. Okay, provided by Trading Central. Okay, very well. Okay, I think we're gonna save this one. Address. Okay, so this one is pretty easy. I mean, maybe first we're gonna do that, and then this, and then that, which is fine. Guys, I didn't receive any questions till now. You're giving me very easy work today with the live Q&A. My job today is to provide you answers to the questions that you want, and I don't see any questions that I didn't cover so far. Okay, so you can ask if you got any questions. In the meantime, I'll keep covering the questions that I received. How does the leverage works? So exactly, what is the leverage? Like, let's pick ourselves. Maybe a Euro USD. Okay. Let's change it to, okay, very good. Now, oh, sorry. It's a little complicated for the time that we have to show it with currencies. Rather take something physical that is measured by units. Okay, so we're gonna go with a bare minimum. Okay, so the way that I've done it, I've put platinum in, and you're already familiar with the steps. I increase that all the way. I click sell or buy to open the sidebar, and I've changed the lot size to 1. Okay, that's the setup that I have. Currently, I have take profit and stop loss. I still haven't played with any of the numbers. Actually, I don't need that now. Don't need it now. I'm just going to explain about the leverage. So how does the leverage works? To understand how the leverage works, first, we must use a nice exercise comparing the price of a product. Platinum will be the instrument that we're using for the sake of the discussion. And we're going to put here price per unit. And the price is 933.5. Okay, and we have the quantities, units, which are presently 1. Okay, and we have the leverage. The leverage is 1 to 10. Okay, and we have something called also margin impact. Requirement. Okay. Okay. The reason that I've segmented that is to show you the steps how to find it manually as well. It's calculated by itself here on the website, but if you're using MT4, MT5, you might want to be able to do that by yourself manually. Okay, now what I'm going to do is I'm going to multiply. This is very simple. Don't worry, we're going to try another variation with more units than 1, but right now we're going to try it with 1. So 933.5 multiply 1 is obviously the same value, and that is called the value. Okay, equals value. In other words, price per unit multiply units equals value. Okay, now you know what, actually let's change it to 5. Really, there's really no point here to do it with 1. Okay, you see it's written here. It's written here. Let's confirm it though to make sure we're doing it correctly. 5 multiply 933. There you go. Okay, very simple. What is the relationship between stop loss and AvaProtect? Lerato, thank you for the question. I'll go through that again maybe, even though I've explained it a few minutes ago, but still, I guess it's fine. Okay. Okay. We'll get to that. Thank you very much for the wonderful question, Lorato. Oh, what did I do? Increase everything. Okay. Yeah, so as I was explaining, this is super simple. We have the amount of units, which is 5. It's not 5 lots, it's just 5 units, right? I want you to understand the difference. 1 lot means 100, so 5 lots mean 500. But I don't want that. I just want 5, so that means 0.05. Sorry. Okay. And as you saw, my value has increased by 5. Now, perfect. So the value is now, let me write it down here. 4676. Again, that's completely fine. We have the leverage. Okay, so the leverage, what it does, leverage multiplies my buying and selling power. Okay, so if I am multiplied, my 10,000 is multiplied as if I had 100,000. With the same logic, I can divide the value by my leverage. If I divide my value by my multiplier, I get margin impact, which is the necessary amount to open the position. Okay, which I must have in my available margin. All right, which in this case is 467. Again, we don't have to do it because it's here, but it's good to be able to identify the process. So later on, if you get stuck and you don't have the facility, or you just you're doing it with another asset, so you can just repeat the same process, right? It's very simple. You check the amount of units, you check the price, you check the amount of units, and then you see. This will work with exactly the same way if it would have been, let's take something else, 20, right? So 20, if it would have been 20, we're going to put here 20 as well. Again, we already have it. We don't have to calculate it by ourselves. And we are not going to do that to save the time. And you see that this comparison is so simple, right? 1869. This is a result of the leverage, right? If the leverage would have been different, if it would have been 20, I could have just divided value by 20, and I would know how much I need. It's really straightforward. There is no really there is no complications to that at all. But still, are there any questions about what I've explained? Any questions? Otherwise, I can maybe just paste it. Maybe I can just paste it here under the, because I want you to have it. Just a second, guys. Thinking of a way how to place it here for you. So maybe later on, if you see the webinar, you can just take it down your notes. Okay, but maybe I should have done it this way. So price per unit multiply units equals value, leverage multiplies necessary amount. This is margin impact. Okay. Okay, and what I'm gonna add now, this is the definitions. This is what we want. Yeah, looks pretty good. Okay. I have something missing here. Oh, right. So I'm just going to put here that value divided by leverage equals margin impact. And that's the missing piece. Margin impact or requirement. Okay. Yeah, this should suffice. Okay. And our following, so basically we have 2 questions left. We have this wonderful question which I'm going to attend maybe now. We'll see, can address. Okay, so this is super simple. Senior account manager equals can assist you with basically all the trading inquiries, right? Trading questions, trading plan perhaps, strategy, calculations, risk money management, analysis. Okay. Sometimes there are certain promotions that can also be that it can also provide you with. Basically, a senior account manager is the solution for all kind of questions, and of course, you have the customer service that can give you customer service. Okay, this one we're gonna. Okay, all right. So maybe we'll put this at the back so it would make sense because this line is a little longer. Okay, all right. Last question is how the fundamental analysis. Okay, but first we're gonna see the question from is there a tutorial for making trades via MT4? Unfortunately, no. But thank you anyway. Thank you for the lovely question. We have also another question about. Thank you for all. What are the applications of these actions? Various central bank, LifePad. Okay. Yeah, we'll see. We'll see if we have time to answer all of that. But this is very interesting. So thank you. Okay. I'm just gonna simply, I don't know if it's gonna allow me to paste it. Maybe I need to break it down somehow. Just a second. Guys, this interface is very challenging. Somehow, maybe I can, because it's a little longer. Or, okay. Well, it worked. Well, it worked somehow. Just hoping that maybe I can make it a little smaller this way. Okay. Okay, that's good. That's very good. We have another question from Mr. M. Okay, we're gonna take your question, sir. Thank you very much. And we will do it this way. This one, I think I might need to break it down a little bit. Yeah, but first, let's understand this question, okay? So the relation, who asked me that question? Oh, Lerato, right? So, Lerato, what's the relation? Is very simple. You remember that I have explained in the beginning that AvaProtect, what it does, it allows us to protect the position for a certain time frame, right? Okay. Now, if I don't use the stop loss and I've closed my position within the 2 days, it's fine, I'll get my money back. What happens if I lost after the 2 days? Let's suppose I kept it for a week. Okay. What happens then? What happens is I'm not going to get the money back after the expiration. Okay. So I covered it for 2 days, but if I kept it for long and I don't have any stop loss on, well, could be unpleasant, right? So the stop loss is also another guardian that preventing me from losing more. So this product allows me to get my losses back, but it doesn't help me when the after it expires. Okay. Okay. I hope I hope it makes sense. Let's see. Ooh, we don't have a lot of time, and I want to. How do I? Just a second. I'm sorry, Ole. I'm not really sure I'll have the time to find all of that. Just a second. Okay. Yeah. Well, let's see. This is very good. Okay. Our implications of this action by various central bank. Happens to the USD, will it go bullish or bearish? If gross domestic product goes up or down, interest rate will happen. Okay. Now, because this fits perfectly, where can I find past recording? On YouTube. On YouTube, you just go to YouTube, you type in AvaTrade on our channel, you hit the search bar, you're gonna write down live Q&A, you're gonna see it. But unfortunately, right now we don't have. I'm not aware of any official tutorial for MT4. So I did have it. I did have it 2 weeks ago, I think, because the audience requested it. I did it on MT4. Maybe you can find it. Could be good for you. All right. Well, I hope it's going to help you. Anyway, Oli, thank you for the question. So we have a couple of things here, very interesting things. CPI. Okay, we have the gross domestic product. We have here the interest rate decisions. We have the CPI, and we have the what happens to the US if dollar goes up and down. What drives the value of currencies more? Okay, okay. Unfortunately, no. So excuse me, but I'm gonna place it here so I can address this this question. Okay, couple of things. All of the things that are mentioned here are fundamentals reoccurrences. That means that those are the most powerful. The NFP is here. It's not here. Never mind. But those are, let's say that those are among the most powerful events. I don't know if to call it events, but let's call it events. Those are the announcements or events, the most powerful among the most powerful that fluctuates the market. Okay, if I'm going to show you here, just a second, we're going to go to the economic calendar. Okay, how can we do it? Let me just show you quickly. So we're going to go down to here, see discovery, going to click on economic calendar. Okay, and we're gonna take, I really hope that we can find it this way and it's not described differently. We're gonna click on all countries and simply mark only US for the time being. Let's try that. Again, when it's closer to the date, it's easier to find those things. Let's see, we have the CPI. Now, as I was explaining, those are the most powerful decisions that there are. Now, this is also the core inflation rate. This is also important. But how does that work exactly? Because the question here was not if they are important or not. The question is how it impacts on the market. So let's go one by one, right? What happens to the dollar? This one is not, again, it's not something that I can tell you. You know, we are not allowed to give financial advice, but let's suppose to. What happens to the dollar if gross domestic product goes up or down? Okay, so if we are producing more, okay, is that good for the economy or not? If there is higher production, is it good for the economy or not? More production, more taxes, more driving the economy, money goes around. Is that good for the economy or not? It's good for the economy. Now the question is referring to the dollar. Now when I'm trading currencies, I must compare the results between one economy to another economy. If I'm looking at the interest rate, is an example, and I look at US decisions to decrease, okay, but England only decreased the interest rate following months or 2 months, okay. Again, I'm not gonna lie to you guys. Euro, pound, but all the major currencies has tendency to stick with the interest rate, so they want weakening their currencies. So if the Feds decide to lower the interest rate, could be followed by the pound doing the same, and the euro is the same, and so on and so on. Okay, but in the initial movement, the interest rate does have significant impact on the dollar. Okay, so but it doesn't necessarily, if the interest rate increased, the dollar was strengthening. Not necessarily. There is a limit of how much can the economy tolerate the higher rate. Okay, because the interest, how does it work exactly? When they increase the interest rate, who takes the initial impact? Whoever has any connection to loans. I'm gonna tell you a secret, guys. More than 75% of the economy is based on loans, not worldwide, but in particular segments. That means that houses, even industrial. Now, this is my personal research. I don't want you to think that everybody now takes loans, but this is, I guess, if you look statistically around you, you may find a lot of people who bought their houses, who bought a vehicle, who bought God knows what, loan for the business. All of those loans eventually are pumped by are increased by the higher interest rate. How does that work? Let's suppose that I took a loan for, let's see if I have time for that. I'm very, very sorry, guys. I'm going to finish my explanation, then I'm going to share with you the links, because this question is completely fundamental analysis wise, and I just don't have the time to answer it properly, okay? But I'm just going to tell you something very simple. Those decisions have impact on the long run and for the short term. Okay, when I'm looking at currencies and I'm trading the pound versus the dollar, okay, what happens is if the pound is getting stronger, the value will go higher. If the dollar goes stronger, the pair will go down. Why? Because this is the prime currency. This is the currency that is versus the dollar. So if it would have been, I don't know, Euro USD, okay, if it's Euro USD, okay, I guess we can we can stretch a little bit. Just a second, euro. Okay, just a few more minutes maybe. Okay, so if we're looking at the euro USD, and I'm thinking, okay, I just saw that the dollar had the bad decision, governmental decision, the Feds or the domestic product or the CPI or anything negatively on the dollar. Okay, maybe the NFP as an example, it doesn't really make any difference. I just understood that the dollar is not doing too well. Okay, so in this pair, if I'm comparing it to the euro, as long as the euro didn't have an impact from the same decision as the dollar, we can see that it will rise. Okay, because again, this is the prime currency. As you can see, it's written here euro dollar and not dollar euro. And this is how it's compared. If the euro is not doing well, or again, if the dollar is doing well versus the euro, that means that performances like CPI and so on are higher, are better than Europe. So we will see it the other way around. Okay, we are always based, the movements are based always on the prime currency. Okay, on the currency that is versus the other currency. This is the primary currency. Okay. All right, I'm sorry that I couldn't give you the complete answer. Again, I don't have time for that. Otherwise, we could have dived down to fundamental analysis in a little more comprehensive chat, but we just don't have the time. I'm going to send you some links here to save you the time to look for them by yourselves. This one is the for education. This one is for logging in and make a deposit. This one, if you have additional questions regarding the facility, the website, or something else. This is for a real account. I guess if somebody's still playing with the demo and he wants to carry on with this and level up the account to a real one and start feeling how it happens, so you can do it through that link. And lastly, you have the Academy. I'll be frank and say you can access it through here as well. So if you click on tutorials, it's just gonna open up this nice video. Nice window, you see, education, then I have tutorials, and it takes me to the same place. It's really up to you to use the link or this. Yeah, and lastly, what I'm gonna do is to give you a nice benefit to get a personal senior account manager to give you a nice one-on-one premium market review, and all you have to do is just to give him this nice benefit code. Okay, I'm gonna paste it here at the chat. All right, so guys, before I'm saying goodbye, I would like to thank everybody who assisted me with the questions. Wonderful questions. And that's it. I hope all of you will have fruitful week, that you had a good time on a webinar and you learned at least one good thing. And that's it. So best of luck with your trading and have a good day.